Bitcoin hitting its highest levels since April 16, as the ProShares Bitcoin Strategy ETF began trading under the ticker BTO on the New York Stock Exchange. BTO opened at just under $40, swiftly hitting local highs of $42.09 in price discovery before consolidating. The strength of the launch served to allay fears that the market would conversely fall into the United States Open in what would constitute a classic by the rumor, sell the news event. According to the New York Stock Exchange, ProShares Bitcoin Strategy ETF, the first exchange-traded fund allowing U.S. investors direct exposure to cryptocurrency futures, opened at a price of $40 per BTO share before it rose 3.8% to reach $41.54 at the time of publication. The crypto fund's arrival on a major stock exchange comes after years of deferred decisions by SEC, the commission responsible for approving the asset. ProShares CEO Michael Sapir said on Monday, BTO will open up exposure to Bitcoin to a large segment of investors who have a brokerage account and are comfortable buying stocks and ETFs, but do not desire to go through the hassle and learning curve of establishing another account with a cryptocurrency provider and creating a Bitcoin wallet, or are concerned that these providers may be unregulated and subject to security risks. The SEC first accepted ProShares Bitcoin Strategy ETF filing on the NYSE on Friday, shortly before doing the same with digital asset manager Valkyrie's BTC Futures ETF shares for listing on the Nasdaq. Institutional asset manager Grayscale also announced on Monday that it plans to convert its BTC trust into an ETF in the future. The SEC currently has several cryptocurrency ETF applications still under evaluation. The ProShares ETF will provide greater market access and ease of use for institutional investors who want to get into the cryptocurrency markets, said Mary Beth Buchanan, Global Chief Legal Officer at blockchain investigative platform Merkle Science. The newest futures-based ETF will trade on the NYSE, and will feel more familiar to institutional investors than opening individual trading accounts and trading directly on a spot or futures-based cryptocurrency exchange or crypto trading platform. Here's what you need to know about the Bitcoin ETF. This ETF will focus on Bitcoin futures as opposed to holding spot Bitcoin, which is a little different. And just because it will go live, doesn't mean it will necessarily be available to everyone. What's the difference between a futures ETF and a spot ETF? With a spot ETF, the value of the ETF will closely track the spot price of the underlying asset, in this case Bitcoin. In comparison, a futures-based fund may underperform or outperform the spot price, potentially leading to a premium or discount. A futures-based ETF will involve the cost of rolling contracts that are about to expire to ones that have longer expiration dates. A spot-based ETF won't have that cost, but it will have to pay for a custodian to look after the Bitcoin, something relatively unique to Bitcoin. Both types of ETFs will likely help to increase the demand for Bitcoin. For a spot ETF, Bitcoin would be purchased as the underlying asset. For a futures ETF, traders will typically hedge their positions by buying physical Bitcoin. Why would the SEC prefer a Bitcoin futures ETF? A lot has been made of the SEC's approval of futures-based funds and distaste for a spot Bitcoin ETF. The thinking behind it is that there are better investor protections around the futures market. As an ETF based on futures, that means it will be an actively managed fund. The company issuing the fund will trade Bitcoin futures, and the success of the fund will depend on their trading strategies. There are other companies trying to launch inverse Bitcoin futures ETFs which are for short positions, but they haven't been approved yet. There are around 5 Bitcoin futures ETFs in line to launch in the near term, with potentially 2 launching nearly. Will a spot Bitcoin ETF get approved? This question depends on the SEC and, potentially, the success of the imminent Bitcoin futures ETFs. So far, the SEC has not expressed any positive signs that it will approve one. Sui Chung, CEO of CF Benchmarks, said that the launch of the Bitcoin futures ETFs will likely not harm the applications for spot ETFs. But on the flip side, he acknowledged that if these futures ETFs go well, and they get fairly big, and are able to satisfy demand that's out there from investors for Bitcoin through ETF channels, then the SEC could argue that demand has been fulfilled. There's no need for us to authorize a spot ETF. How much demand will there be for a Bitcoin futures ETF? There has been a lot of anticipation for a Bitcoin ETF because it can be made accessible to a lot of US citizens, particularly in a tax-efficient way. They may very well be supporting it, but what I'm saying is it's not a given, Chung said. He added that it's possible they don't make the ETFs available to all customers, potentially only letting certain clients access them. That aside, Chung noted that there's a lot of demand for Bitcoin through an ETF wrapper, which he expects to be filled in the next few days as they go live. After that, the sustained interest and sustained inflow is very hard to predict, he said.